Hey there. It is February of 2025. And this week I wanted to talk about how the market is continuing to um, stay where it is and what that looks like for a lot of our investors, a lot of our owners, and some questions that I've been asking or answering, or my team has been a little more regularly right now. Um, what are those questions that our investor clients are asking, and why? And I think the market is right now is on the sales side. Let's start there. It's a little stalled out in that it's become more of a buyer's market because we have so much inventory. Interest rates have stayed the same, which in essence has caused the buyer pool to continue to stay about where it is demand wise, consistent year over year versus any sort of change in trajectory, no more demand than there was last year. So what that looks like with added inventory is we got, less houses selling. So sellers have to come to the table and be thinking more about how they're going to get these properties sold, or how we are. Take now additional buyers looking for deals, whether they're hedge funds, whether they're other investors looking at opportunities and saying, hold on, there's still going to be a shortage of housing in Phoenix over the next few years, 100%. The issue is, of course, interest rates have prevented most buyers from making it feasible. I will go into that in a video here in the next couple of weeks. I'm going to bring Rachel in again because she's been helping a lot of our uh, tenants that are looking to expand into purchasing, or different buyers that she's working with and trying to put plans together to assist, whether they be grant programs, down payment assistance. And she's walking me through how just unrealistic in some places and some ways those programs are, with interest rates as high as they are. So it's an interesting place that we're at, which means that as an investor, more than likely you're not going to be expecting a lot of appreciation this year, because we're not seeing a ton of appreciation this year. We just won't, because there's not going to be enough demand, right? um, However, on the rental side, we've got at least a couple more years for these apartments to go through the cycle. We've got, another, I think they said there's nationwide, there's another more than 500,000 coming online before the end of this year. There were 500,000 that came online last year nationwide, more than 500,000, which was the most that ever came online in a year. So nationwide, we're seeing apartments that are starting to hit this market. And from a local level, which is more important to what I'm looking at, yeah, on a local level, we've been talking about this, that uh, we have all these long or these apartment buildings that are coming online that are depressing our condos and townhouses that we're renting, because now we're competing with them. They'll offer things like 3 months free rents. Well, we're not doing that, right? So that's depressed that subset of our market, which is then kind of spilling into these other subsets like residential single family houses, and kept the pricing somewhat the same. Um, but over time, over the next couple of years, we're going to see rents increase because demand is going to continue to stay higher. Uh, if interest rates stay the same, then yes, rents are going to more than likely stay high, go even higher, because uh, interest rates generally will get people renting, right? Increase interest rates, which generally will lead to rents going up. But in this particular case, um, we're just in this wonky space right now. Okay, so let me get back to my original point. Question that we're asking or getting asked this week more than most, and it's not just this week, it's been now since the beginning of the year, is as an investor, you're trying to think of what are your options for your property right now? Should you sell it right now, take that money and redeploy it somewhere else? How does that work? And the question becomes, from our standpoint, we've got to look at, first and foremost, when's your lease expire? When does the lease come up? And if that's the case, let's say your lease is coming up at the end of April. Awesome. If we can get involved 2 to 3 months prior to that happening, we can make it pretty seamless from the move out to clean up and turn to on market, painless. However, Let's say that you have a tenant that's extending into October of this year. What are your options? You've got somewhere to redeploy that cash right now. You're like, dang it, I need this thing to sell this minute. What are your options? Well, first, if the tenant has a lease, first and foremost, we have to honor that lease. If the tenant is open to negotiating those terms, we can have that conversation. What that will sometimes look like is a seller buyout, right? What does the seller buyout look like? It's up to what you negotiate. We can talk about that offline if you have additional questions about that, but I can tell you what's worked in the past and how that's been helpful. Why do you want to do that instead of, let's say, sell it with a tenant in it? First, I'll tell you straight up, you sell your property with a tenant in it, the only buyers that can really buy that property are going to be investors, because most buyers' financing is going to require that they occupy that property within a certain amount of time after the close of escrow. So if that's the case, now you got this tenant in there. First of all, does the tenant really want to show the property? Does the tenant want to keep it in the condition that they need to? Contractually, yes, they're supposed to, but do they want to? And do they make it easy? The key is, how do we make this easy and a win for everybody so that we can get you the most bang for your buck, the highest return on your investment, versus having to be adversarial and in this situation that does not serve you. Promise. Secondarily, when we're looking at when the tenants have a lease that's in place, sometimes owners will come to us and go, can we sell this to an investor? That gets to why I put this in front of our hold worksheet today. Let me see if I can move this. No, I can't. So ultimately, uh, the answer that I was going to answer with this, before I ran into my technical glitch, because I don't know how to use this flipping system. That's all right. I will learn it. But in this particular case, the numbers and what they look like is, does an investor want to buy a property with a tenant in it right now versus deploying that money somewhere else? When somebody says, hey, can you sell this to an investor? I think first and foremost, okay, what am I doing right now? Am I going to buy this property myself? Because remember, I'm an investor. So I'm looking at your property and I'm going, hey, first and foremost, hey, tell me about what your return is. What are your rents? What are the terms of the lease? Which I know that already. But how much money is that return on my initial down payment? Now, what this hold worksheet was going to share, which thanks to those who created this hold worksheet, it's amazing. I used to be a KW agent, and some of the people there on that team had driven this and put this together. You can find other resources like this on Bigger Pockets or online, but where can you put the numbers to see how does this play out, and does it make financial sense? What's my return on my investment if I was to buy your property for, let's say, $450,000? So $450,000, what is my return? Um, in this particular case, based on the stats that I put in the system, I'm showing a return on investment of 9%, cash on cash, for a property at 450,000 if I pay cash for it. Now, does that make sense to me? Right? It's like in this particular case, total ROI, or cash on cash, sorry, 4%. Okay, so 4%, we got a total ROI of 9%. 9% right now in this market, like, is that worth putting money into an investment like that and and dragging that on? And the answer is no. Like, most investors don't want to see that right now. That's not the market that we're in. So ultimately, and this would be a cash sale of $450,000. We've got some, let's see this example. Let's see. Net rental income for the year would be $21,000. Net annual cash flow, we think, is about 18 here. The start of the property is 420,000. The value that I had built into this is that the investor was going to immediately get about $20,000 worth of equity in this property when purchasing. So it does end up working out a little better than most, because that's the case. But as an owner, if you're selling your property, are you expecting to get retail pricing with the tenant in there to an investor? Most investors are paying like 80 to 75 cents on the dollar for some type of opportunity like that, because it's just not worth it to them. They need more skin in the game. They need more. Return on their investment, right? So again, I hope that helps. I hope that's something to kind of get you thinking that direction when it comes to selling your property, you can't have both. You can't have the highest price and the easiest type of transaction. It's just right now in this market, it's just not there. When you want and you come to us and say, we want the highest possible value for this property, we got to retail it. We got to clean it up. We got to get all these pieces back in play.